Well, always a pleasure to welcome Dr. Ashima Goyal to take her inputs on the credit policy. Ms. Goyal, good morning. Thank you for joining us. What is good about the credit policy? What is bad about the credit policy? What is missing in the credit policy? And your smile tells me that you're happy with the credit policy.
Yes, I think it's really time that we started on the rate cuts. They're already delayed. So there's scope for more, but given the global volatility, it is good to start in small, steady steps. And this gives the guidance to the market that they can expect further easing. Data-based, the MPC should always be and has been data-based in the past. And the talk about easing liquidity is very important also, that the exchange rate is market determined, but the RBI will prevent excess volatility. So there need not be fears of sudden very large depreciations, or if there is such a depreciation, it would be reversed, because that would mean an overshooting of the exchange rate. Already the real exchange rate is at 104, so it's marginally appreciated. There's still room for some more depreciation. In general, for the economy, it is good to keep real interest rate, real repo rate, and real effective exchange rate near equilibrium levels. For me, that real interest rate is around 1%. The economy does best if it is at that level. And since we want growth to recover, real repo rates should come down towards that. And we have enough buffers to ensure that we don't have to respond to the exchange rate. The interest rate, the MOU of the MPC is for inflation and growth, domestic parameters. So the interest rate is not tied to the exchange rate. The RBI has multiple instruments to moderate excess volatility there.
Ms. Goyal, now the governor also spoke about the real GDP growth, and that is between the bracket of 6.3% to 6.7%. My question to you is, do you think that growth can be maintained given the kind of macro headwinds that we're seeing in the global economy? I mean, you can't really be sure about what Trump does next.
I think we should not be so focused on Trump, because our own economy is highly diverse and has the ability to absorb foreign shocks. We are not a small open economy that is entirely, everything is determined by what happens outside. And we saw in the post-pandemic period that we grew at very high rates, even though the rest of the world was not growing at such rates. So over the last year, the slowdown, the origin is largely domestic. There was fiscal, monetary, as well as prudential tightening altogether. So we are seeing that the government is now spending. The budget has been announced. We're catching up on the lag in capital expenditure. So the fiscal contraction is reversing. Now monetary contraction has also been reversed, and liquidity is plentiful. So we should find monetary financial conditions are also relaxing. So we should see recovery. This slowdown is cyclical and it should turn around. So I do not think 6.7 is an ambitious forecast. We could see growth coming up even higher than that. Our potential growth is higher than that as conditions improve in the domestic markets.
Right, Dr. Goyal, good morning. Cheryl also joining in the conversation. I wanted to talk about liquidity, given the fact that you had the governor speak about the liquidity, saying that they are committed to providing sufficient liquidity, proactively take appropriate measures on that particular front. But the street is not too enthused about it, given the fact that they did not see any concrete sort of an action on that particular front. What's your take?
I think that earlier RBI was in the withdrawal stance for a long time, and therefore they were keeping liquidity tighter. But they have the tools, even though the market is worried that there are large outflows, and this tends to tighten liquidity. But if the RBI wants to, they can neutralize, they can sterilize the impact on liquidity of those outflows. They have the tools to do that. So the commitment that they are going to do that means that liquidity will not tighten, it will stay adequate in the future.
So, Ms. Goyal, as an MPC member, if you were part of MPC, would you have voted for the obvious things which the current MPC team has done?
Yes, yes. Since June, I've been voting for a cut. In fact, I wrote an op-ed recently saying to cut or not to cut Hamlet's question and argued for a cut. Because, although the dominant market view was that there should be a cut given the slowdown and that inflation is coming to it, absolutely reaching the target almost. But there was a worry about external factors, the Trump factor. So I'd argued that we don't need to anchor our policy on external developments. We have sufficient tools, and we should go ahead with the cut, because why we did well after the pandemic was that we had counter-cyclical policy. We smoothed the impact of external shocks. Now, if we sit and do nothing and say, okay, Trump, volatility, global demand is falling, and our own demand is falling, and we are not countering it, that would make things much worse. That would aggravate the global shocks. So the steps taken today are part of smoothing external shocks and keeping our growth going. We see very positive things. Over the last 3 years, we've had high growth. And the latest data on employment is showing a rise in firms' employment. Yeah. So that will also create demand and generate a virtuous cycle in the economy. So it's very important to smooth growth, keep it high, and let our own domestic demand drivers fire and growth drivers fire.
Leave it there. Thank you, Dr. Goyal, for joining us today to give us your view, especially sitting on the other side this time around. So thank you so much for being part of the show.